Hey everyone, welcome to Trading Capital's exclusive analysis. Today we're going to discuss some of the earnings that are taking place after hours. Lululemon, a household name, reporting earnings and gapping down in the after hours. Lululemon did report EPS and revenue. EPS beat came in at $3.10 versus the estimate of $2.85. Revenue came in at $2.53 billion, lower than the estimate of $2.54 billion. What is happening to Lululemon? It is gapping down here in the after hours. Now, the question is, what type of forward guidance are they going to be giving? In terms of their next Q3 2025 earnings in 91 days, revenue estimate is $2.55 billion and EPS is $2.92. Now, a couple key interesting observations that I want to bring to your attention about Lululemon. This is a new 52-week low when their entire retail sector has pretty much been posting strong earnings. You look at basically VSCO here, Victoria's Secret, sorry, VSCO, Victoria's Secret today, gapping up to the high side. You've had strong earnings from Nike, although it has gotten faded a little bit. They did post a strong gap up on their print. You look at a name like VFC, which has had a nice little breakout and going through a bit of a bull flag pattern here. So across the board, the majority of retail stocks are doing quite well. But when it comes to Lululemon, new 52-week lows, and full disclosure, I just started a long common share position. This is going to be a free trade idea, not financial advice, but just a free trade idea. I did accumulate some common shares off of the 178.90 area, and I'm going to tell you why. There's really two main reasons, one technical, one fundamental reason. So the technical reason for Lululemon, okay, we have now retested a major COVID volume area. This is a capitulation zone, and this is a bullish breakout zone. You have a gap fill that was obviously filled because you reversed bullishly, but you had a gap fill on the capitulation side of COVID, which is a high volume zone, and then you had a gap up on the bullish side reversal. So there's two massive weekly chart gap fills here for Lululemon. Could the stock go lower? Yes, but you have to start taking your chances somewhere. And obviously, the company is slashing their annual sales profit forecast and demand tariff woes, according to Reuters. But nevertheless, Lululemon is making sense even on a fundamental basis. Sure, Wall Streets don't like when revenue starts to decline, but when you look at how cheap Lululemon is, if we throw on a price to earnings multiple, okay? PE right now for Lululemon, as of the close day, it was 14. After this drop in the after hours, you're trading at 12.35. Dirt cheap. There's only been one other cheaper time in Lululemon's entire stock market history where it was cheaper on a PE multiple. And what type of area was that? That is having to scroll all the way back. Let me just go to the weekly chart, but it's having to scroll all the way back to your GFC crisis. So Lululemon really was the only time it was cheaper was back here during your GFC crisis all the way in 2008, 2009. So I think although Lululemon is under a lot of pressure in the after hours, it makes sense to get your feet a little wet, not saying go full port, but this is still a household name that's likely eventually going to turn it around. Maybe they're going to announce some sort of a partnership just like American Eagle did with Sydney Sweeney, which obviously could catch a little bit of momentum. But when you're buying the stock, the cheapest on a price to earnings multiple for since the GFC crisis, that is a pretty big level in my opinion, just to start accumulating some long positions. Now, we also have AVGO Broadcom that is reporting, and this is an institutional semiconductor stock. Basically, Broadcom right now is still very, very expensive, but they beat both the top and bottom line. EPS coming in at $1.69, 9.74% beat. Revenue coming in at $15.95 billion versus the estimate of $15.83 billion. Right now, it had a wick down, a wick up. It's kind of just staying flat and muted as it looks like institutions are trying to do a bit of an IV crush on this name. Again, this name is very important to the overall semiconductor market. The SOXX, it does have a huge weighting in the overall SOXX, so definitely pay close attention to Broadcom, how it shapes up. Its Q4 2025 EPS estimate is $1.68, and its revenue is $16.99 billion. So they're still showing consistent growth. They're still trying to grow both the top and bottom line, and we'll see if they can live up to those expectations. Please give this video a like down below, and we will see you on the charts a little later.